Guys, the difference between a losing trader and a trader who's able to consistently extract money from the markets. Now, even the consistent trader is not going to win every trade. They're not going to be green each and every single day, let alone each and every single week, or hell, they might even have a red quarter. But over the long term, over a series of trades, over an expanded time period, the experienced trader who's been around the markets and kind of figured things out will be successful versus the losing trader, because the losing trader does not follow a plan. And I know a lot of you guys have thought of it before, but I want to kind of expand on it because, I think sometimes, it's at the top of our heads, it's at the front of our minds, but like, it's like, oh, well, I've got a plan, but, hey, well, maybe this and oh, maybe that. Well, the market is doing this and that. Sure, guys, market conditions are going to change. Ranges are going to expand. Setups that maybe were working 2 or 3 months ago maybe not be working anymore as good. The thing is that the losing trader, they're always constantly making up things as they go. Okay. And what that means is, I'll give you an example. So in my trade plan, in my overall system, I have what's called an opening drive. Okay. And an opening drive for me could be either a long or a short, typically within inside the first 10 minutes of the market. Okay. Within the first 10 minutes of the market, I look for what's called an opening drive. I teach this inside of Evolution Traders to the people in my community. So if you guys are open to learning new strategies, you guys can definitely join. Link down in the description box below. Now, the opening drive setup, because it's a part of my system, because it's a setup that I take normally and regularly, probably 2 or 3 times a week, if the setup looks absolutely beautiful. So today was one of those instances where I was literally done trading with inside the first 15 minutes of the New York session. I could realistically care less what happened after that first 15 minutes because I had a beautiful opening drive short. Now, some of the rules for my opening drive short is, what did we do in the pre-market? What did we do in London? Do we have a definitive swing low? Okay. And if we do confirm that swing low, how much space is down before that next support? Now, if I was to kind of look at this situation and let's say market was going to open and we're somewhere right here, okay, somewhere in this range. Well, there's not a really clear opening drive play because, if we lose the low, maybe we have room to come down here, but it could also snap back, right? If we kind of confirm the highs, well, I've got 50 SMA, 200 SMA resistance here. Maybe it kind of pushes that and then snaps back. So not a whole lot of clear picture, perfect trades if we were opening up in this range. Okay. But if you kind of notice, we started to really fall going into the New York session open. And then literally the first 5-minute candle kind of took out the opening range of that pre-market low. Okay. Now, I'm not jumping in on this candle. What I'm waiting to do is take second entry. I believe in taking second entry on everything. So a second entry for me is allowing that pivot to get broken and then letting that new low get put in and then taking confirmation. So my entry would be here. Okay. Entry is there. And honestly, my sell was here as well, because if you kind of just look at, the severity of this red candle was 77 points. So again, for a scalper like myself looking to take 10 points, on 2 or 3 mini contracts, that's all I really needed. But kind of getting back to the point now, sometimes the losing trader will see this type of setup. Let's say off the open, we just start selling off. And then it's like you kind of sitting there and you're scratching your head and you're like, oh, wow, the market looks like it's going to sell off. And then, the next candle opens up and we're kind of just still pushing down. And then it's at this point, you kind of just fire away. You say, okay, market's going down. Let me just go ahead and jump into this trade. And you jump into the trade somewhere here and then it snaps back. And when it snaps back, even though it does proceed to fall, this snapback is the better half of around 25 points. And there's not a lot of people who can trade a lot of size, especially with prop firms, that can handle 20 to 30 points worth of heat. So you get stopped out here and then it continues to flush about 95 points. And now you're sitting here in complete FOMO, ready to overtrade, ready to over leverage, ready to get the money back, when all you realistically needed to do was not take the trade. And the reason why you should not have taken the trade is because, one, it's not a part of your system on a day in and day out basis. Two, a lot of times you're not following a proven plan. So let me take myself and let me make myself trader A. Okay. And let's take the losing trader and let's make the losing trader trader B. Well, trader A looks for this quote unquote opening drive setup on a day in and day out basis. If it looks really good, if we've got some key levels that are breaking down and we've got room for expansion. Trader A has gone through a lot of forward testing as well as back testing with this particular setup model. Trader B basically shows up to the market and starts to guess. Market's going down, I must get short. Market's shooting higher, I must go long, right? Market shoots down 100 points, it must bounce. Take the long, get stopped out. So trader B, which is quote unquote the losing trader, tends to do things outside of their plan, outside of their system. Now, I'm not saying that trader B can't take this setup, but they can't take it if it's not part of their routine. So if something like this, if a setup like this, if a trade idea like this is something that interests you, then you need to actively build it into your overall trade plan. It needs to come with rules. It needs to come with a certain set of circumstances. It needs to come with a certain set of parameters that need to all be check marked off. You need to understand how much size you're going to play on this. And then each and every single day, as those setups start to present themselves, you start to take those trades on very small size in the beginning until you get comfortable with the way that it moves, until you get comfortable with making those adjustments, okay? And until it becomes part of your routine. So the difference between a winning trader and a losing trader is simply that the losing trader is very sporadic. They do not follow a plan. They do not follow the same techniques and the same strategies and the same models each and every single day. They're kind of just making up things on the fly. This looks good, I'll take this. I think we should bounce, I'll take this. Someone else on social media, told me to do this, so I'm going to try this. Versus the seasoned trader has particular setups in their toolbox, in their arsenal, and they fire away when those setups happen, regardless if it wins or it loses. Because trader A knows that over a series of trades and over a series of mathematical statistics, it provides a little bit of an edge to stick to that plan. Even if your edge is something like 5 to 15%, 5 to 15% expected value, including losses, is really, really good money. Okay. Now, maybe 5% return on $1,000 is not great returns, but 5% on 50,000 is a lot better. 5% on 100,000 is even much more better. 5% return on $1 million is phenomenal. So it's not necessarily about just coming in here and making things up as you go, trying to catch a home run trade here, trying to take a scalp there, but it's more so about having a specific set of trade setups and ideas that, if presented to you, you are comfortable taking on a day in and day out basis, regardless of outcome, regardless of win or lose. If you guys would like to join me in Evolution Traders and get access to a lot of the strategies that I use on a day in and day out basis to, trade for prop firms, pass evaluations, get payouts, join Evolution Traders. It's a one-time fee. You're a lifetime member, get access to the course, access to the community. If you guys would like to try out new strategies, I definitely recommend opening up some fresh evaluation accounts. That way you don't go out there and start blowing a bunch of accounts that you already got. Right now, Apex has got 70% off. Day Traders has got 75% off. Both of those links are down in the description box below. You can use code DAnthony, and that's going to get you the best available rate. With that being said, guys, please leave me a thumbs up if you found this video what helpful, or something clicked, or something resonated with you. Just let me know that it resonated with you by clicking the thumbs up button, and I will see all of you guys on the next video.